Good afternoon, management staff. Today I have prepared a presentation for you on behalf of our company, Atlassian. I will be focusing on the financial position of our company and will also provide a comparison to one of the major market competitors, Microsoft. I will be basing my presentation mainly on the existing 2019 annual reports rather than the 2020 ones, as they have not yet been officially released. Just a little bit of background. Our assets are lower than Microsoft, as you can see from the graph. We have total assets of 2,977, while Microsoft has $286,556 million worth of assets. And a similar trend can be seen with our total current assets with 2,042 million and total non-current assets of 935 million, of which both Microsoft has a higher number. Liabilities as well is very similar, as Microsoft has higher number of liabilities at 184,226 million, while we have 2,412, and similarly total current liabilities we have 2,330 million and total non-current of 82 million, both of which are again lower than Microsoft. A bit about our equity. So we have a $565 million worth of equity, while Microsoft is higher at $120,330 million. We have a market capital just shy of 45 billion as of September, while Microsoft has 1.5 trillion. Total outstanding shares, we have 245 million. Microsoft has more at 7.5 billion. At the time of preparing these slides, our shares were worth $177 per share and have since risen to $186 as of 2nd of October, while Microsoft had $200 per share and has since risen to $202. Our revenue is lower than Microsoft at 1,210. Our main streams of revenue are subscription and maintenance, while Microsoft has main revenue streams from their productivity and business processes, as well as their intelligent cloud. Being a larger company, Microsoft has a higher expenses number at 90 billion, whereas we have 1,063 million. Our main streams of expenses come from marketing and sales and general administrative, while research and development, sales and marketing, general administrative are also Microsoft's. We have the same streams of expenses. So what are all these numbers for? We have used them to calculate a few ratios, as you will see. So liquidity, we would generally aim for 1, and we are currently below that at 0.8. Microsoft has higher liquidity at 2.5. Again, a bit more ratios. So our cash ratio is currently lower than Microsoft. We would normally prefer higher. We have 0.05 and Microsoft is 1.9. We have an operating cash flow ratio of 0.2, which is lower than Microsoft's 0.7. Leverage. We have a debt ratio higher than Microsoft. Usually a lower ratio would be preferred, but having a high ratio just means that we have taken a bit more risk in our business adventures. We have fortunately double the ratio of interest coverage than Microsoft at 39.86. This is good, as it means that we have a better financial health. A little bit about our profitability. Our gross margin ratio is higher than Microsoft. This is good, as it means that we keep a larger revenue from the services we provide rather than Microsoft does. But unfortunately, our return on assets ratio is lower at 0.072, while Microsoft has higher at 0.13. Thank you so much for listening. I hope you enjoyed the presentation and that it was informative.